Hi, good evening, everyone. Thank you so much for tuning in with us today. Okay, so looks like we have some people here already. So if you are listening, if you are tuning in today, leave a comment in this comment section. Let us know how you're doing, or just say hi in the comment section, so you know there are some people tuning in. Okay. Okay, today we have invited from Macquarie Malaysia company again to join us about to talk about warrant trading strategies. So if you are interested to learn about structured warrants, you may check out our previous webinar on warrants on our Facebook page or even our YouTube channel. Okay, but before we start the webinar, I would like to bring your attention to the campaign that we are running right now. As you can see on the screen, there's the top fan campaign. So you just need to tune into this webinar and you'll get rewarded tonight. So I believe most of you are excited as I am, okay, as this is also our last top fan webinar for this year. Okay, let me guide you through how you can join this campaign, and you can win up to 100, and there are also some special prizes. Okay, so if Lady Luck is on your side tonight, you'll be also one of the 3 lucky ones to win 300 ringgit worth of petrol gift card. Okay, terms and conditions are applied. So here are the steps to participate in the campaign. Okay, as you can see on the screen, you have to make sure you turn on your top 10 badge. If you don't have it, you just need to share this webinar and you will get a sharer badge on your comment. And then comment top fans in the comment section if you have a top fan badge. And if you don't, just leave any comments below. Okay. And step 3 is to screenshot this webinar together with your comment, and make sure you are doing this when it says it's live. As you can see on the top, there's a red mark that says live. Okay. And the final step is that you fill in the top fan Google form link that's attached, and attach it to the screenshot. Okay, this link will be provided in the comment section. So if you see there's a form to a Google form, there's a link to a Google form, sorry, in the comment section. Okay, you may fill up the form after the webinar is done, so you don't miss out anything on this webinar. Okay, we will still check the list after the webinar. And if you wish to win the prizes, follow this step that I just mentioned, and we wish you all the best. Okay, so I see some of you are already commenting top fan. So let's not further delay the webinar, and let's welcome Kum Kie from Macquarie Warrants Malaysia.
Hi, thank you, Don.
Hi Kum Kie, how are you doing today?
I'm good, man. How are you?
I'm fine as well. Good Thursday. Okay, for
It's good
those
to hear.
you that haven't joined our warrant seminar, warrants webinar in this year or in the past year, okay, KK joined as the equity derivative sales division in Macquarie Malaysia since 2020, and he has been in this industry for 12 years. So I think he's gonna have a lot to share with us tonight. Okay. Without any further ado, I'll pass the floor to you, KK. Okay, and hope everyone has a good session. Thank you.
All right. All right. First of all, thank you, Don. Thank you so much. And a very good evening to everybody here that is tuning in for this session. Before we start, I just want to give a big thanks to M Plus for organizing this session and also having me tonight. By introduction, my name is Kum Kie, or you can call me KK, and I'm working in the warrant sales team here in Macquarie, Malaysia. And I'm certainly delighted to be here this evening. Okay. Before that, I just want to wish everyone here a job well done for taking your time to attend the session. It means that you are taking your trading seriously. And I really hope tonight's session will bring good value to you. I will try my best to make this session as interesting as possible. Yeah, so without further ado, let's just start off. Okay, as usual, before we get started, I just want to remind everyone that the presentation materials that I'll be using today has not been reviewed by the SC. And also, please do not download or make available the materials of this seminar to the public without consent. Also, just a reminder that all investment products, including warrants, are subject to significant investment risk, including the possible loss of principal invested. So please bear in mind that past performances are not indicative of future performances. All right. Also, the materials that are provided here are for information and educational purposes only, and they don't constitute any offer or advice or even recommendations to conclude any transaction. Right. Before making any investment decision, you should consult to the extent necessary your professional advisors. You should also read the full details of the warrants, including the risk factors which are set out in the most recent base prospectus and the relevant term sheets of the warrants, which can be found in our website, malaysiawarrants.com.my. Okay, so do not invest in them unless you fully understand and are willing to assume the risk that are associated with them. All right, so let us just go into the agenda for the night. This is the plan for this evening. These 5 topics. It looks like a long list, but rest assured, I will try to keep it as short and simple as possible. I will just go straight to the point. It will be like a refresher course. It will start off like a refresher course where I will quickly run you through what was discussed 2 weeks earlier by my colleague Liana. And then I will go through some case studies on how calls and put warrants can be used for trading. And then before that, I will show you the how you can utilize the free live matrix tool for your structured warrants trading. Right, and then only we'll go into the warrants trading strategies, and lastly, how you can get updated on warrants and other market updates uh, in the last section. Okay, so without further ado, let's just get on. Start off. Um, First one is just a brief recap of what we have covered in part one of the session by my colleague Liana 2 weeks ago. Basically, these are the topics that were touched previously. You will have learned about, what are warrants and their moneyness and other terms like effective gearing and so on. You will also have learned about the expiry dates and time decay, and also the 4 simple steps that you can use to select a warrant. Okay, and also she has introduced she would have introduced you to the new warrants that we offer on the US indices, such as the Nasdaq warrants as well as the Dow Jones warrants, as well as the Hong Kong stock warrants. Okay. And lastly, the important tools such as the warrant search tool as well as the live matrix tool, which we are going to go about after this on how you can use it. All right. Okay. Firstly, to start off right on the case studies. Now, before we get into that, I just wanted to briefly mention what are the reasons why most investors choose to trade warrants. All right. Now, the first one being that being the gearing. Okay, gearing. If you ask me, is the main reason why people like to trade warrants. Why? It's because that this gearing effect of a warrant enables warrants to move in a bigger percentage compared to their underlying. Or in other words, a small change in the underlying um, may result in a large percentage change in the value of the warrant. Okay. Now, one example here is to imagine if we have a stock and it's called warrant. Let's say the stock is priced at 1 ringgit, whereas the warrant is at 10 cents. If a 1 cent change in the 10-cent warrant will give you a much bigger percentage change than compared to a 1 cent change in the $1 mother share. Meaning that if both have gained by 1 cent, right, that would mean a 1% change in the mother share, whereas the warrant would have gained by 10%. Okay. Now, the second reason why, the first reason on gearing, right, is that the warrants will have a much bigger percentage change as compared to the underlying shares. All right. Now, the second reason why people choose to trade warrants is because of the fact that warrants, they are actually cheaper in terms of their absolute price. The amount of capital needed in order to start trading would tend to be lower. For example, if let's say an investor wants wishes to trade a share, say for example, public bank. Okay, so let's say if the current price is around 5 ringgit, and let's say if the investor does not currently have that much initial capital, so instead of trading the underlying mother share, they can actually go for the warrants instead, because the warrants they are cheaper. Okay, at the same time, they can also gain the same exposure as in the mother share, but only at a fraction of their share price. Okay. Also, I mean, because you spend less in structured warrants, right? It actually gives you excess capital to diversify your portfolio into other products, meaning that you can use the excess capital to trade other products as well. Okay, and also with less capital incurred, I mean the commission charges and so on and so forth, the brokerage fees and stuff are also much lower. All right. Now the third reason why many people choose to trade warrants is that they can trade foreign markets without leaving Bursa Malaysia. Because warrants, right, they can be issued over any underlyings that are listed locally or abroad. So by trading the warrants, right, by trading the warrants over foreign underlyings, it gives you exposure to trade the overseas market without leaving Bursa Malaysia, which means you can use your existing broker account or CDS account to trade the warrants. And last but not least, investors can not only gain exposure to the market on the upside, you can also trade the downside as well using put warrants. Right? This means that whether the market is up or down, you are still able to trade both directions. Okay. Now, in the next slide, I would just quickly explain how you can use call and put warrants to trade markets. Okay. Now, say for example, this stock, you have this stock BYD. Let's say if you're a technical trader and you would want to trade the stock. Let's say for example you saw the stock has made a base here, has formed a base here, and you want to gain exposure to this stock. Now, of course, in this case, if you want to gain bullish exposure, you can just go ahead and buy the stock directly. Okay, but let's say if you think that the stock price is maybe too high, or maybe the lot size is very big, and you don't have enough capital for such a big size, you can actually you can actually use the call warrants, right, to gain exposure on the underlying. Okay, so for example's sake, right, let's pretend that instead of buying the underlying stock, you directly, you choose to instead buy the call warrants. All right, now if let's say you take this trade here, the you would have noticed that in that 1 month period, right, from 28 June to 23rd June to 28 June, the underlying stock actually went from 304.8 to 331.4, which is an around 8.7% gain. But what is more impressive is that if you have decided to buy the call warrant C10 instead, the gains would actually be 18.1% instead. Okay, this is due to the gearing effect, which what I said is the main attraction of why people trade warrants. Okay, so this is how you can gain leverage exposure to certain underlyings via structured warrants. Okay, which means that it can serve as an additional tool in your portfolio if you want to gain exposure to a certain stock with a smaller amount of capital. All right, now this is on the upside. You can also trade the downside via put warrants. Okay, now of course, if you have been trading for quite some time, stocks, they don't usually only go up, they will still come down. Okay, so what you can do here, instead of waiting on the sidelines and waiting for the stock to rebound, you can actually trade the downside. All right, now thanks to the help of the put warrants, you can actually trade the downside. In this case, for this instrument, the iShares A50 ETF, the underlying actually fell by 8.3% from 20th April to 10th May, whereas the put warrant would have gained by more than 39% within the same period of time. So investors right now, not only they have more choices to trade the local and foreign underlyings, They can also trade in both market directions as well. Okay, giving you more choices. All right. Also, take note, because put warrants, right? They actually move in an opposite direction to the underlying, which means when the underlying goes up, the put warrant will go down. Okay, and in this case, when the underlying came down, the put warrant went up. So this is how you can trade the downside using put warrants. Okay, now just quickly, I would guide you through the live matrix tool that is available on our website for free to everybody. Um, the past 2 weeks, my colleague Liana would have mentioned about this tool before. This is how it actually looks like. Okay, now I believe other issuers would also have this tool, and this is how Macquarie's live matrix looks like. Okay, now the live matrix page, if you do not know, it is actually directly connected to Macquarie's market making system, and it indicates where Macquarie's bid and offer price will be in a warrant based on various price levels in the underlying stock. Okay, we were the first issuer to come up with this back in 2014. So what it does is it gives investors a very transparent view of our pricing with no registration or no lock-in required. So this means the investors, right, they no longer need to guess where the warrant will trade at when the mother share moves to a certain level. They can just see it right from the live matrix. Okay, so that's why we always encourage investors to check the live matrix before trading, so that they can quickly check if a warrant is, on, for example, whether the warrant is on a wide spread or a tight spread. Okay, so um, this is another view of how the live matrix plus look like. Now, because the this tool, right, it was actually introduced a very long time ago, we have made a lot of improvements to the functions and layout of the live matrix page. So the new layout is what you see here. It comes with all these indicators here, all these indicators. So you can see, I mean, based on the live matrix right now, you can straight away see if a warrant is sold out, or if a warrant is nearing expiry, and so on and so forth. Okay, actually, then this is actually very useful to investors, because if, let's say, if a warrant is sold out, right, they will straight away see it here, and then they can avoid the warrant already. All right, so besides that, right, you can also use the live matrix tool to map out your trading plan. Okay, how you can do this is like this. So it's just like trading a stock. So when trading warrants, right, you should also know what your target price is for the underlying, so that you can plan in advance the level that you should exit in the warrant. So in this case, let's take for example, if we are trading the Hang Seng, and you want to buy the call warrant CJC, for example. Okay, so we should always look at the HSI futures. So let's say once you know, right, once you know your entry and target price, right, then you can already know where to plan your trades based on the live matrix. Now, in this example, right, let's assume that maybe you plan to enter, maybe you plan to enter at this price at 20125, and then your target would be at 20. Let's say, for example, your target would be at 20230, for example. Now, based on this live matrix price, right, you will have already know in advance what price you will need to buy, which is this price, and then you will have already know where you would queue to sell to take your profits. So in this case, if let's say you want to buy when the Hang Seng futures is at 20125, you would know that the warrant will be trading at this price, at 50 cents. Okay, and beforehand, you know your target at 20230, and beforehand that you will have already know where will the warrant be trading at when the underlying goes to 20230, or 227, thereabouts. Okay, so in advance you can already queue your order at that target price. Okay, so this is how you can plan your trades in advance with the live matrix tool. Right, now that was the target. Okay, because similar to trading stocks, right? It's also equally important to set a stop loss for warrants. Okay, so let's say assuming that you want to set a stop loss for this warrant that you bought. Let's say you want to set a stop loss. Let's say you think that if let's say the Hang Seng breaks this level, 20062, for example, you have already know where will the warrant be trading at, which is at this price. Oops, at this price. So beforehand, right, you would have already know where your entry and stop price will be at when the underlying breaks certain levels. So this actually helps you plan your stop loss ahead of time. Okay, you don't have to guess where the warrant will be trading at anymore. All right. Now the next one, because once you know your entry and your stop loss price, right, you can also use the live matrix tool to plan your money management, as in position sizing. Position sizing. So let's take for example, you have a 100K account, and then you don't want to risk more than 1% of the total account. So you only want to risk 1% maximum in this trade. So 1% of this 100K, right, is 1,000 per trade. So whatever the case, you only want to the maximum that you can lose. You want to you are willing to take, right? The maximum risk that you're willing to take is only 1,000. You can also use the entry and stop loss price in the warrant to calculate how many units that you need to buy. So in this case, for example, the max loss that you can take is 1,000. All you need to do is just divide this 1,000, right? You use it to divide by 0.015, which is the distance between your entry price and your stop loss price. So then you will get the number of units that you need to trade in order not to lose more than 1,000 ringgit, which is 1% of your account. So this is how you can use the matrix to plan your position size as well. Okay. Now another way, right? Another way. Another use of the live matrix, right, is also to look at whether a warrant is on a tight spread or a wide spread. Now, what I mean by spread, the spread means, right, if you look at this warrant bid and offer, right, if it's just one tick apart, then it means that it is tight. And if it's anything wider than one tick, that means it is on a wide spread. So normally when you are trading warrants, right, you will have to always keep an eye if the warrant you are buying is on a tight spread or a wide spread, because you don't want to buy into a warrant that is on wide, because once you buy it on wide, right, you will immediately incur higher trading costs. So it means that the underlying will need to move even further in order for you to break even at cost price. So this is one of the ways of using the live matrix to see the bid and ask spread. Okay, now, okay, that was the the warrant part. I mean the live matrix part. We have come to the trading strategies part now, um, which I feel is the most interesting part for me. Okay, the strategy that I'm about to share with you, right, is actually based on a technical analysis approach, which hopefully will help add add value added to you, to your trading. If you find it useful, do feel free to add them into your trading strategy. There are actually many different kinds of strategies out there that you can use. This is just one of them. I try my best to simplify everything and make it as easy as possible for everyone to follow. Um, as with other strategies, right, you have to bear in mind that you have to understand that no one strategy that is a holy grail. So there is no holy grail. There is no sure win method to trade the markets. So it's always important for you to back test and do your own due diligence. All right. Now, the examples, right, that I will be sharing later on the strategy and the stocks. Um, they will only be it's the examples that I'll be sharing you, right, they are by no means um any advice or recommendation to buy or sell any stocks. They are just for educational and illustration purposes. All right. So without further ado, right, let's just go to the first setup, which is on the uptrend. Okay. Okay. Now this is how you can use this strategy. It is actually based on multi-time frame analysis. Okay, multi-time frame analysis, which means that you will have to look at two different time frames, at least two different time frames. Basically, one higher time frame and the other one lower time frame. So one higher time frame and one lower time frame. All right. The higher time frame is to confirm a trend, whereas the lower time frame is where you trade the instrument. The indicators, right, that I will use for today is just the basic indicators. I'm sure you have heard of exponential moving averages, exponential moving average, EMA. So what EMA that I will be using is the 8 EMA, 21 EMA, as well as the 50 EMA, 50. Okay, and then that is the first one. We need EMAs. And the second indicator that you will need, right, is the RSI indicator, relative strength index. Okay, in which this RSI in this indicator, right, you have to do a little modification to the upper band and the lower band. Okay, we will have to change the upper band to 60 instead, 60 to 60 instead of the default 70. And then we also have to change the lower band to 40 instead of the default 30. Okay, I will show you how you can change it later. For now, let us go to the conditions part. What are the conditions that you need to look at for this setup to be ready? Okay, now for this strategy, right, the conditions, they are actually very simple. Just now I mentioned you need two different time frames. Now in this case, right, let's say your higher time frame would be your daily chart, and then your lower time frame would be your hourly chart. So you'll be trading on the hourly chart, but your higher time frame is on the daily chart. Okay. Now, for an uptrend, right, the first condition of the strategy is that the on the higher time frame, the daily chart in this case, it must be above RSI 60 level. Okay. So when it's RSI 60 level, we call that in an uptrend. Okay. Now, if you look at the picture carefully, right, the top part, this top part, this is actually the RSI. Both are actually RSI. The blue color RSI is actually your daily time frame RSI, which is the higher time frame RSI. Whereas the bottom one, the lower one, the white line, the white RSI is your lower time frame RSI, which is the hourly RSI. Okay, so the first condition here, right, to be satisfied is that the higher time frame RSI must be above 60 level, a numplo 60. So if you notice, right, if I draw a line here, I cut this line here. After this line, the RSI is actually above 60. And when RSI on the higher time frame is above 60, you would notice that the trend would be uptrend. Okay, so that is condition number one. So this is condition number one. All right. Now, condition number two is to look at the lower time frame RSI, which is the hourly RSI in this case. All right. So what we want to do here is to make sure that the lower time frame RSI is taking support at either 60, 50, or 40 levels. So if you see clearly, if you see properly, right, I don't know whether it's clear or not. If you see properly, um, there are three horizontal lines here. The first line is the 60, the middle one is 50, and the bottom one is 40. So the second condition here, right, is you want the lower time frame RSI to go to the support is of either 60, 50, or 40, and then form a inflection point. Inflection point, what we call inflection point is like a U-turn. It's like a V shape, starting to curl upwards. Okay, so your second condition, right, is for the lower time frame RSI to go to either 60, 50, or 40 RSI and then curl upwards. And at the same time, you will also see corrective activity in the price candles towards the moving averages. Now, I will explain here in this chart so that you can see clearly. So in this case, the second condition, right, which is the lower time frame RSI, we want it to be either 60, 50, or 40, and then forming a U-turn. So in this case, right, if you notice here, the RSI actually went to 60 and then forms like a U-turn. At the same time, the candles also retrace back to their moving averages. You see the candles actually went back to their moving averages. So at in this left corner, right, the the candles are actually very far apart from the moving averages. So now the once the RSI have retraced back to the 60 RSI, the candles you return back to mean. So that satisfy the second criteria. Whereas the third criteria is to wait for a range breakout, which is your trigger for the entry, in which sometimes you can actually use any support resistance breakout from here. Okay, so that those are basically the three conditions that you would need for the setup. Okay, now if you notice here also, the RSI actually took support at 60 as well, and then at the same time, candles have retraced back to the moving averages, and then from there, after they retrace back to their moving averages, you will see breakout activity forming. So that is actually the three conditions that you need. Okay, I will explain. I will explain in the next example how you can do it via an actual chart. Okay, now so here I actually have a few case studies that I've prepared so that you can easily understand how you can use the strategy. So how you how you can apply the indicators as well. So for this example, right, I have used the underlying P metal. Of course, I just want to remind everybody again, this is not, it is just for education and illustration purposes. They are not any investment view or recommendation to buy or sell. I'm only highlighting the examples and how you can use the indicators. All right. Now, the first step, if you remember just now from the previous slide, is to make sure you have two time frames, right? One higher and one lower. First condition is to make sure that the higher time frame is above RSI 60, above RSI 60. So in this case, right, the higher time frame, I use the weekly chart, and then the lower time frame whereby if let's say I want to trade, I use the daily chart. So your higher time frame RSI must be above 60. So if you notice here, the RSI actually went above 60 starting from this point and it ends here. Right. So if you also notice, right, whenever the higher time frame RSI is above 60, the stock is in an uptrend. So that is your first criteria. So your first criteria must be on the higher time frame RSI to be above 60, and then you move on to the second step, which is the lower time frame RSI. Your lower time frame RSI must go to either 60, 50, or 40 RSI levels, and then form a U-turn, form like an inflection point. So in this case, you will notice here it formed, and here as well it formed. You will notice, right, the RSI is actually taking support at the lower time frame 60 level RSI. So that is your second criteria. You will also, in the second criteria, you also need to make sure that the candles have pulled back towards the moving averages, which you see here. It pulls back to the moving averages. And then once that two conditions has been satisfied, you are left with step number 3, which is to wait for a potential breakout of a structure. So in this case, if you draw like a trend line, that would be the trigger. Okay. Now, based on this example, right? The investor could have traded the underlying stock directly, and the underlying stock would have went up by 14.8%. But if let's say he thinks that the underlying is quite expensive, and he wants to save some money and stuff like that, he can actually gain exposure to this underlying via the call warrant. Now in this case, when the mother share went up by 14%, more than 14%, the call warrant actually went up by 62%, 62.5%, within the same time period. Okay, so this is this is how you can gain exposure to a certain underlying for at a lower initial capital, a lower trading capital. All right. Okay, just now I've highlighted on the static images. So if you are still unsure of how you can do this in your charting platform, I can quickly demonstrate to you on how you can pull up the indicators in your charting platform. So you get like a clearer picture. All right. So if you allow me, let me look at the chart. Okay. Say let's say for example this chart. The first step, what you need to do here is to have the indicator set up. So what you want to do here is to have the indicator set up. So what you need is the EMAs. Now, if you see here, if you look at the indicators, all you need to do is to just input these three indicators, the 8 EMA, 21 EMA, as well as the 50 EMA. So these are the three moving averages that you need. Also, you will need two different RSIs, one for your higher time frame, one for your lower time frame. Okay. Now, the first one, which is your higher time frame RSI. So let's say, take for example, I want to be trading the daily chart. So if I want to trade the daily chart, your higher time frame can be your weekly chart. So what I do here is your first RSI, I will change the time frame to a weekly chart, weekly time frame. And then remember to change your RSI upper and lower band to 60 and 40. So the default here, right, would be 70 and 30. So what we want to do here is to change it to 60 and 40. So there you go. The first one, the first RSI will be there, the higher time frame RSI. So the second thing that you need to do is to look at the lower time frame RSI. Now, this lower time frame RSI, all you need to do is just you leave the time frame as chart, which means that the RSI will actually follow the time frame that you see in your chart. Okay, so in this case, you want to be trading your daily time frame, so you just leave it as this. All you need to do is just change the upper band and the lower band of the RSI to 60 and 40 respectively. So then you will have the all the indicators that are needed. Okay, and from here, right, I will demonstrate how you can chart this using the strategy. Okay, now if you notice here, right, the blue RSI line is the higher time frame RSI. So the first criteria, just now I said it must be, the RSI, higher time frame RSI must be above 60. So if you notice here, starting from this point, I've drawn a vertical line. Starting from this point, right, the higher time frame RSI is actually above 60 up until this level. So this will be this line from this left yellow line to the right yellow line. This will be the area that you want to be keen on looking at the chart. Okay, so once step one is done, you go to step two, which is to look at the lower time frame RSI. Now, just now, if you remember, your lower time frame RSI, right, should be at least it must be traced to at least 60, 50, or 40 levels. Now, if you see here, this level, the lower time frame RSI actually retraced to the 50 level. As well, the candles, right, would have pulled back to the moving averages, if you see here. So once that two criteria is satisfied, right, all you need to do is to wait for a trigger. In this case, the trigger, you can use any breakout patterns as your trigger. So if you can see here, from the left vertical line to the right vertical line, there are actually a few areas that that you can trade the instrument. This is to 60, and this is to 60 as well. So these two are to 60 and these two are to 50. So all the setups, right, they are actually quite the same. So once it reaches lower time frame reaches 50, you just have to stand by for a breakout or a trigger. So in this case, you can just draw like a line. So once it triggers, you can the stock will actually move, right? So the other here as well, all you need to do once the step one and step two has fully set up, all you need to do is to wait for a trigger. So we definitely we wouldn't know how far it will go or how low it will go, but this is just the market. Okay, so this is actually how you can trade the setup. Okay, basically, right, this setup, right, the key idea here lah is to only trade in the direction of the trend, which is already well established. Okay, now if you, I mean, how you can do this, right, is that you you want to be trading when the bigger time frame RSI is above 60, because when it's above 60, right, it is an uptrend, and the trend would have been well established. So what you want to do is to be trading in the direction of the higher time frame. That's basically the key idea. Okay, so because this is why you say that, right, is because if you have two different time frames, right, the higher time frame, I mean, the higher time frame will make it more like, I mean, the lower time frame will be more likely to follow the higher time frame, and this actually adds confluence, or adds more probability to the trade. Okay, so that is the main idea on why we use the strategy. Okay, now moving on, I have another example here. This stock is the Hong Kong underlying, and the Geely, the car maker. The same thing. First step here, what you need to do is to make sure the RSI is above 60, which you see here. If I cut it here, it has just crossed above 60 on the higher time frame. The second step here, once you know that the higher time frame is above 60, right? The second step would be to look at your lower time frame RSI to make sure that the RSI retraces back to 60, 50, or 40 levels. Okay, so in this case, it has retraced back to the 60 levels. At the same time, right, you will notice the candles also pull back to the 8 EMA. So this satisfies step number 2. And your last step would be to wait for a trigger. So the trigger can be a breakout of a structure, breakout of a previous support and resistance. Okay. Now in this example, the underlying actually went up by 19.4%, whereas the call warrant at the same time, at the same period, would have gained by 87.8%. So this is how you can trade. Okay, you can choose, I mean, pick momentum to trade. Okay, so you can trade the momentum by using using call warrants. This is how you can use call warrants to trade the upward momentum. Okay, now that is on the upside, because market, right, they don't always move up. There's also downtrend. So basically, right, the downtrend is the total opposite of the uptrend condition. So what you want to see here, right, the first condition, still two time frames are still the same, two time frames. The first condition, the first step is to make sure on the higher time frame your RSI is below 40. So if you notice in the picture, right, from this left area to this right area, the whole RSI is below 40 already. So whenever the RSI is below 40 on the higher time frame, you will notice the stock is in a downtrend. That's number one. So number two is to look at your higher time frame. Now this time, because you are trading a downtrend, so what you need to do on the lower time frame is to wait for the RSI on the lower time frame to hit either 60, 50, or 40 resistance level. Now, how you know the RSI has reached a resistance is when it reached that level, 60, 50, or 40, it forms like a U-turn, like an inverted V, starting to curl down already. Okay, so that is your sign, your second sign, as well. The candles, right, would also need to move back to the moving average. So which means they revert back to the moving average, revert back to mean. Okay, that's step number 2. After step number 2, all you need is to wait for a trigger to trigger an entry, which can be done by a range breakout. It's just the exact same thing, like what we did in the uptrend part. It's just you just flip the opposite side. This time it's 40 level. All right. So this example here is a bearish setup for this stock, Baba. So I mean, again, this is for educational and illustration purposes. It's not any advice or recommendation to buy or sell. I just want to show you the indicators, how it works, how the setup can work. The first step, the same thing. All you need to do is to look at you have two time frames. You need to make sure, step number 1, the higher time frame would be below 40. So in this case, I've already I drew the vertical lines. If you see here, vertical lines. So this will be your area of analysis. So if you notice, right here, the higher time frame, um, the RSI is below 40. So whenever the higher time frame RSI is below 40, you will notice the stock is down, is in a downtrend. And then you can move to step 2 to make sure on the lower time frame, your RSI pulls back or rebounds back to 60, 50, or 40 level and then starts curling back down. So in this case, for this example, if you notice here, the RSI lower time frame actually went back to the 50 level and starts curling back down. The price, right, actually went back to the 50 moving average as well. So after that, right, all you need to do is to wait for step 3, which is a trigger for a structure breakout to trigger the entry. So in this case, the trigger would be here when it breaks the support. So in this case, I mean, those days are long gone. Last time when without put warrants, right, we just have to wait for the stock to turn back into uptrend. So now with put warrants, right, even when the stock is going to drop, when the RSI is below 40. So in this case, right, you can use the put warrants to trade the downside as well. So in this case, Alibaba actually went down by more than 32%, and within the same period of time, right, the put warrant H4 would have gained by more than 108%. Okay, this is maybe around 3 weeks time. Okay, now if you look closer in this chart, right, let me just erase everything first. If you look closer in the chart, so if you look closer in the chart, right, this whole area is actually downtrend below 40. So there are actually a few areas that you can look for entry. So here will be one when the RSI goes to 60, we're in 50. Here is 60 as well. Here is 50. So all you need to do is just wait for a trigger for a breakdown. Okay, so in this case, right, we wouldn't know where how far the target will go. Sometimes it will be big, sometimes it will be small. So but the setup here is as is, when you will be only be trading in the direction of the trend. And how you look at the trend is by the higher time frame RSI, below 40 or above 60. Okay, I have another last example here. I think we are running slightly out of time. I mean, if you want me to look at another chart later for a downtrend, I can also do it. But let me finish the slides first. The same process, everything is just repeating the same process over and over again, because trading it should be boring. It should be boring. So your strategy, right, it should be simple, it should be objective, and it should be repeatable. So you must be able to keep repeating the same setup over and over again. Okay, so the same setup here, from the yellow line here to this yellow line here, this is the area where the RSI, the higher time frame RSI is below 40, and you will also notice the trend is in a downtrend. So what you need to do is to just wait for the lower time frame RSI to pull back to 50, 60, or 40 levels. So in this case, it pulled back to 50 levels. As well, the candles, right, also went back to the moving averages. They're forming like a small base, like a small cup. And the third step, right, is just to wait for a trigger in which when it broke the trend line, when it broke the support, the stock actually went down by 26.4%. Okay, the I mean the investor, right, can actually trade the downside by using the put warrant, and the put warrant at the same time would have gained by 87.9%. Okay, so this is how you can use put warrants to trade the downside of an underlying. Okay, now again, right here, if you look carefully, if you look closely, right, from this left area to the right area, there were quite a few entry points as well, because you will see the lower time frame RSI, right, actually retraced to 50 levels here twice, here the third time, here the fourth time, here to 60 levels for the fifth time. So all of these would have been steps, would have been the possible entries. Okay, so I mean, of course, the possible entries will only be triggered when step 3 is triggered, which is the the breakout of a structure. Like let's say breakout here, breakout of a structure, breakout of a structure. So that would be the trigger point. So the main idea here is this. You have to make sure that we are trading in the direction of the trend. Okay. Now, coming to the next part. Coming to the next part. This is the last part. I it's just about the market news and updates that you can learn about. Uh, if you have been in Telegram, if you are in Telegram, we have a Telegram channel. Do join us in our Telegram channel for continuous updates on any warrants related matters, market news, and also educational materials. We also highlight investors, right, on new warrant listings, what are the market movers, and what are the trending warrants as well. So uh, besides that, we also provide a lot of educational tips to investors on our Telegram channel, such as how you calculate warrants expiry. How do you calculate the warrants cash settlement when it's expiry date, such as corporate actions as well. So do follow us. If you're on Telegram, do follow us on Telegram. You can scan the QR code here. And if you want to do it later, it's no problem also. All you need to do is to just go to Telegram and search for Malaysia warrants, and you would be able to see our channel there. Okay. And for the folks that are very active on Facebook, oops, for the folks that are active on Facebook, do drop us a like and follow on our page, on our Facebook page. We post the same updates there as well. You can scan the QR code here, or maybe later, if you want to do it later, you can also search for Malaysia warrants on Facebook, and you'll be able to find our page. It looks like this. Okay, so um, okay, so I think we have maybe a few minutes. Um, do you want to see any examples again? Just now I showed you the live example for the uptrend. Maybe now, since I have some time left, I can show you the example on the downtrend. All right, so let me just pull out the chart. Okay, so say for example, just now I showed you the uptrend example, right? So now, right, we can go to the downtrend example. So what you need to do here is to just input all the indicators like what I told you just now, but it's just the balik. So let me just take a stock that is on a downtrend. Okay, here RSI, if you see here, I already scanned RSI below 40 on a weekly. So let's take, for example, this chart. Okay, let's say take, for example, this chart. So the first step is just the same thing. The first step, what you need to do is to make sure the higher time frame. So let's say you are trading the daily time frame here. Your higher time frame can be your weekly chart. So all you need to do is to make sure on the higher time frame, your RSI is below 40 to be on a downtrend. So if you see here, starting from this yellow line, the underlying RSI, higher time frame RSI is actually below 40. So at the same time, right, you will also notice the stock is in a downtrend because it's below 40 RSI on the higher time frame. So what you need to do is just move on to step 2 to see when to stand by when the RSI pulls back to either 60, 50, or 40 levels and then forms like a U-turn, like an inflection point. So in this case, you will see here, it went to the 40 levels and then form a U-turn. At the same time, right, the candles would have also moved, the candles would have also moved back to the moving averages. It means it reverts back to mean. On this part, right, this part you see the candles are actually very steep. It is moving away from the moving average. So what we want to do is to wait for the step 2, right, is to wait for the RSI on the lower time frame to go back to either 40, 50, or 60 levels. At the same time, the candles move back towards the moving averages, and then from there starts to form like a inflection, like a U-turn. And then all you need to do is to wait for step 3 to trigger the for a range breakout or breakdown in this case. So here you will see the price breakdown and all the way. Okay. There was another one here when RSI move back to 50, and this time the candles would have moved back to the 50 moving average as well. So the trigger would be your trend line. Okay, or if you, let's say you are a more conservative trader, you use your horizontal trend line. So the trigger would be around here. So that's basically how you can use this strategy to trade the markets. Okay. Now, I think I'm past my time already. So if you have any further questions or in the future regarding warrants or regarding the strategy or what, do give us a call at this number. You can also email us at this email, info@malaysiawarrants.com.my. Yeah, this marks the end of my session tonight. So I hope the session would have been a very, would have brought you very good value. I hope it brings a very good value to you. If you found this session useful and you want to learn more, do drop us some feedback in the chat box, in the Q&A box. Hopefully soon we can meet again. All right. So hopefully soon I can share with you more. All right. So with that, I think I'm passing the floor back to Don. Don, back to you. I'm done.
Hey, Kum Kie, thanks. Very informative session. I think the strategies can be applied, especially in the current market now. So I think we have still like 4-5 minutes before 8. I think we can take some questions. And if the audiences, you haven't commented top fan to win the prizes or share the video, please do so while we are answering some of the questions. Okay, we have first one from Hong Ji. Okay, what is the settings of your RSI and what's the period and all that?
Oh, okay. To keep things simple, right? I did not change any settings at all. So my RSI, right? The period would still be the default period. The default period for all the most of the charting platform, right, would be 14 days. So would be 14 candles. 14 is your default. So what I use as the period is 14 period, just the basic default period. The only thing that you want to keep in mind is the upper and lower band. So because if I pull another RSI here, right? If I pull another RSI indicator, right, you will notice okay, this lowest one is my new RSI indicator. So if I double click on the settings, right, you will see the default will be 14. That will be what we can be using. But the upper and lower band of the RSI, it's 70 and 30. So what we want to do here is to change this from 70 to 60. And then the lower band, we want to change it from 30 to 40. That's basically it. So, and then after that, you can customize your color because you want to differentiate the higher time frame and the lower time frame. You just need to change the color that suits, the color that you like lah. And then it must be easier to read also, that you can easily read the trend of the instrument.
Okay, cool. Thanks. Okay, another question here from Ayet. How do we know if there is a fake rebound of the RSI from the support level?
Oh, okay.
Is there
So
any way
let's
to
say,
detect? Yeah.
yep. Okay. Do you remember just now when I mentioned there are 3 different steps that you need to take? First step is to check the higher time frame. Second is the lower time frame RSI. The third step, right, I mentioned is to wait for a trigger, wait for a breakout or something. So in order, right, how you can mitigate the chances of fake rebound, right, is to wait for a trigger. So the trigger, right, can be a range breakout. That's why I emphasize just now to wait for a range breakout on step 3, because that step 3, right, actually helps you to reduce the risk of the fake breakout, because sometimes it can just break out and then pulls back. Okay, so what we want to do is to wait for it to close below the uh, the previous support level, previous structure. So once it breaks below that, right, then the setup is on. Okay, so basically step 3 is to let you avoid the fake stuff.
Okay. Okay. Good tip. Good tip. Okay, one last question here is which are the most important things for us to look at when you're considering to buy a warrant? Like, is it like gearing, expiry dates, or
Oh, okay.
volatility, anything?
Oh, okay, okay. Noted. Okay, basically what you want to do, right? It actually depends on what kind of trader you are. So of course, all these terms that you mentioned, the effective gearing, the expiry date, the sensitivity and all, right? Those are very important, but it needs to be catered towards the investor's needs. So let's say, for example, this is a daily chart that you see here. So daily chart that you see here, basically once you take a trade, you would have to expect, to hold for maybe 1 or 2 weeks. So your expiry date that you choose, right, would always need to be slightly further in the future. So it has to be slightly further to avoid to let you have some buffer, just in case it takes a long time for the underlying to move in the direction. Okay, so uh, for other traders, let's say for those intraday traders, or they like to do scalping or stuff like that, then because just now I've mentioned two different time frames, right? Normally, what you want to do, let's say for swing trading, you do weekly and daily. For intraday traders, right, you can actually use hourly and 15 minutes. So once you are an intraday trader, right, the warrant that you want to choose, right, you want to look at the expiry date to make sure that it is not going to expire, and also the this sensitivity. What you want to do is to look at this sensitivity. So you have to make sure that the warrant is sensitive, so that it moves fast enough for you to day trade, get out on the trade. So that actually depends on the investor itself.
Okay, thanks. There's
Oh
two
yeah.
more questions, but I think I can take them. Do you have anything to add on?
Oh yeah. Just one thing, Don. Just now,
Yes.
when choosing the warrant, right? Also, one thing important, right, is to look at the bid and offer price. So you want to make sure that you remember the live matrix that I told you just now. So before trading the warrant, right, you have to go and look at the live matrix to make sure that the warrant is actually on a tight spread. So you wouldn't want to buy a warrant that is on a wide spread, because you will increase the cost of trading. So you have to make sure that the warrant is not sold out, because once it's sold out, it will be on wide. So you have to make sure that it's tight. That is the another important factor that you want to look
Okay.
at. Mhm.
Okay. There's these two questions, but I think I can take them because Hongji is asking if our charting we are able to customize as what Kum Kie has shown. For our M plus chart on the interactive chart, you can do that. And also Lucy is asking regarding account opening. You may visit the link that we just dropped, is registration.mplusonline.com. And yeah, I think that's the last two questions that we have for this evening. So once again, thank you for doing this with us, collaborating for this Top Fans campaign, and also sharing to our audiences.
No, no problem. Happy to do that, man.
Yeah,
Thank you so
thanks.
much, everyone, for attending the session. I I wish you luck.
Okay, okay. Good luck to everyone, and hope you guys have fun trading orders and have a good evening. Thank you.
Thank you.